So let's talk about currencies today. All the crises in the world, whether it's the Middle East or Ukraine, all eventually revolves around the dollar. It's America's economic superpower and it gives it the ability to tax the world through inflation. But this situation is starting to change for the dollar, and the Middle East crisis is pouring fuel on the fire. We know the Middle East is moving closer and closer towards BRICS. Countries like Iran and the UAE will be joining the bloc in January, but Saudi Arabia is advancing their interest in the global south and they are doing it really fast. In our lead story today, Chinese Saudi central banks signed currency swap worth $7 billion. The kingdom is growing their bilateral ties with China fast. Middle East countries have been shifting away from the dollar, but the Israel war has accelerated things. A currency swap is easy to understand. Saudi Arabia can access up to 50 billion yuan by swapping their local currency, the rial, for it. I swap my local currency for yours for a specific period of time and then we exchange them back. This is a powerful tool that allows MBS to directly bypass the dollar in global trade. China's the world's factory, but because of the current system, exports are mainly priced in dollars, and this enhances bilateral trade between China and the Saudis, and there's a lot of trade happening between the two countries. In 2021, Saudi-China bilateral trade hits a whopping $87 billion. That's at least 3 times more trade than with the United States. Even without the Middle East crisis, Beijing and Riyadh has been trading like crazy. So this currency swap deal confirms the Saudis are moving away from the dollar. They have to do it slowly with their non-oil exports first, or else Joe Biden will lose his mind in a hurry. But if we throw in the chaos and the diplomatic failures from the US, the Saudis have less incentive to stick only with the US dollar. I'm not saying they will exit the dollar 100%, however, things will change. The majority of trade will still be done in dollars, of course, but more and more will be done away for bilateral currencies. Remember what underpins the petrodollar agreement? The Saudis and the Middle East would sell oil only in dollars, and this will help secure the dollar as the world reserve currency. In exchange, the US would ensure at the bare minimum peace and security in the Middle East. But we know what's happening with the Israel war today. The conflict is spreading, strikes on Syria are happening, and ships are getting hijacked in the Red Sea. And until the US pushes Israel for lasting ceasefire, we'll have another incident after incident happening that pushes us closer towards literal Armageddon. The Saudis, they are getting disillusioned with the deal with America, and we'll continue to see a greater shift towards bilateral trade. And that's why we can't separate economics from geopolitics. They are all connected. The crazy decisions made by President Biden, they all have a tangible effect on the global economy. While the currency swap line is only $6 billion strong, that amount will grow because the oil for Yuan trade is coming. The Saudis have been trading carefully, but it's just a matter of time before it happens. In 2022, China imported $65 billion worth of crude from MBS. This accounts for 83% of Saudi Arabia's total exports to Beijing. Not only does China have the leverage to influence Saudi Arabia, America's own actions in the Middle East is speeding up the process. In other words, the United States is helping China to de-dollarize Saudi Arabia. The chaos in the Middle East is hitting too close to home. For MBS, it's more consequential than the Ukraine conflict. And what's equally important is the economics. Saudi Arabia can theoretically remove dollars from all their trade with China. In 2021, Saudi Arabia exported $49 billion worth of stuff to China. The majority, of course, comes from oil and gas. China, however, only exported $29 billion worth of stuff in return. Saudi Arabia has a big trade surplus dealing with Beijing, and this means Riyadh can easily convert half of its total bilateral trade with China from dollars to yuan. They can buy $29 billion worth of stuff from China without using the US dollar and sell 29 billion in Saudi riyals without taking any excess currency risk. And this is the beauty of bilateral trade outside of the dollar. And many countries are starting to wake up. They are starting to ramp up trade in the yuan to diversify their trade flows. And this chart tells us the whole story. Foreign countries are using their currency swap lines with China more and more to access the yuan. Since 2015, the swap line use has gone from 18 billion yuan to nearly 120 billion. That's a six-fold increase in just 8 years. Look at the incredible jump from 2022 onwards. Because of all the US sanctions on Russia, central banks and governments realize they have to diversify, especially countries in the Middle East and the global south. They aren't just buying gold for their reserves, they are also using alternative currencies for bilateral trade. And when the majority of your stuff comes from China, you might as well use some yuan to trade with the Chinese. Even Japan, a G7 country, has a 200 billion yuan swap line with China. They've extended the currency agreement until 2024. Tokyo realizes that they can't completely rely on the US dollar either. Take the Japanese yen for example. Since the Fed rate hikes, it has collapsed at least 20% to the dollar. Because Japan imports a ton of food and energy, they have to use dollars because everything is still priced in a reserve currency. Japan is no longer a net exporter today, they are net importer now. They buy more and more from the world than they sell. But that creates a big dilemma. Japan has to sell more yen to acquire more dollars, and this drives up the dollar's value even more and destroys the value of the yen further. It's a doom loop that many countries face, and that's why we'll continue to see more bilateral trade being done in other currencies. Saudi Arabia's swap line with China isn't the first, and it won't be the last. More Middle East countries will follow suit very soon. And this won't stop. It will only get worse for the United States until they can get a grip on things. And their number one priority now is the Middle East. The more Israel keeps hammering down on Gaza, the worse it looks for America. There are consequences for giving diplomatic cover even if you are, as President Biden puts it, the essential nation of the world. All the non-essential countries will start moving away because they are after all non-essential, right? But if all the non-essentials start moving away, that's going to be very essential for the essential nation of the world. And that's why America is freaking out and starting to push hard for a pause. And it's probably the best we're ever going to get. Listen to this. Our goal should not be simply to stop the war for today. A two-state solution is the only way to ensure long-term security. Now, whether you like it or not, this is the current position of the Biden administration. A ceasefire isn't peace, and they want to push through towards a complete two-state solution. But Israel is giving the US a big headache. Blinken and Biden has come out saying multiple times warning Israel not to occupy Gaza. It isn't a good idea and they shouldn't do it. However, according to Netanyahu, the IDF won't be done for a long time. Here's what he said. The IDF will have complete freedom of action in the Gaza Strip against any threat. Only this way can we assure the demilitarization of Gaza. So even if America genuinely wants a two-state solution, this is going to be near impossible. They will continue to lose influence in the Middle East. Saudi Arabia's Yuan deal came on the back of an Arab visit to China. This is very significant. You know things are very bad when the Middle East has to fly all the way to Beijing to find a resolution because the whole situation is out of control. In a story from Bloomberg, China hosts MidEast diplomats to discuss the war. Senior ministers from Saudi Arabia and Egypt arrive in Beijing to call for peace. This development is directly tied to the fate of the US dollar in the Middle East and is not looking very good. The Arab world is very angry and they have indirectly called out the United States. According to Egypt's foreign ministry, there are unfortunately major nations that provide cover for the current Israeli attacks, and this is a strong rebuke. This isn't a good look for the United States. If things continue down this path, de-dollarization will accelerate in the Middle East even further. It will get worse and worse for the reserve currency. This is a runaway train that doesn't seem to be stopping. But the US dollar isn't done yet. Something crazy is happening in Argentina that's putting things into reverse, at least for a while. And we have to talk about it. The maverick of Argentina, Javier Milei, has won the elections. He's going to be the next president of the country. Normally, a new president wouldn't make the headlines, but Javier Milei is so controversial that everyone's talking about it. He even wants to abolish the central bank and take away its power. But let's talk about the two biggest outcomes of this election, especially when it comes to the current world order. At least in Argentina, things are moving more and more towards the west and less towards the global south. Milei has threatened before to freeze ties with China, and he doesn't want to trade with Beijing, so this shouldn't come as a surprise. The bigger shakeup comes from Milei's advisor for foreign affairs confirming that Argentina would no longer be joining BRICS. According to her, we do not understand the interest in a bloc of leading emerging markets. And this is really bizarre because BRICS accounts for 30% of global GDP. Argentina itself is an emerging market, but what's more important is their share of the global population. Even without Argentina, BRICS accounts for 45% of the world's population. Argentina's main exports are agricultural products. They export food. BRICS is a huge market that benefits from Argentina directly with a population that will continue to grow. We can see Argentina having an enormous trade deficit month after month. It reached almost $2 billion in June. Argentina is importing much more than they are exporting out. China is already floating the idea of a BRICS free trade agreement. And if that happens and Argentina is not part of BRICS, they'll be missing out on expanding their trade potential, and that's very serious. But I kind of guess it doesn't matter, right? Argentina's decision has been made, and their next radical step is to dollarize their economy. Argentina will be embracing the US dollar very soon. Now, in the short term, it might be a good move. Argentina has endured three sovereign debt defaults. Their inflation rate has gone as high as 200%, which is totally insane. So I guess it makes sense to climb on board a sinking ship when you're already halfway drowning. But what happens after that? Let's say Argentina manages to dollarize their entire economy without a hitch. They remove their central bank. What happens next? You are now introducing a new problem in addition to your existing export crisis. By dollarizing your economy, you are giving up financial sovereignty. You can start hanging paintings of Jerome Powell in a finance ministry because that is going to be your new god of wealth. Or you can plaster that big dollar bill on everything. You can't print your own currency, which means you need to export more stuff to the world to get dollars. Argentina's overall exports declined by 4.1% in Q2, while imports rose by 3.7%. Switching to the dollar won't solve this crisis. That has to be solved first. Secondly, you also can't control interest rates. The Federal Reserve controls the cost of borrowing for you. You are at the mercy of Fed policy. So if the Federal Reserve one day tightens when Argentina needs to ease, your economy could collapse. Argentina is about to embark on a grand experiment which at best will change absolutely nothing. And is this good news for the dollar? Yes, in the short term it might be. If Argentina goes through with their dollarization plan, it might be bullish. But this could be a net negative for Argentina, the country itself. And I kind of have a suspicion that this is connected to Milei cutting relations with China as well as dumping BRICS. If Argentina wants a smooth dollarization transition, they need an ample supply of dollars. This means they need a currency swap line with the Federal Reserve. They need the ability to swap Argentina pesos for US dollars in the interim, or else they will have a big liquidity crisis. And whether the US will give them one or not, I have no idea. In this table, you can see which countries have a standing dollar swap line with the Federal Reserve, and it's a very select list. G7 nations like Japan can access an unlimited amount of dollars, but even at the smallest amount at $30 billion, there's only Denmark, Norway, and New Zealand. It's a really small select club. So by moving away from BRICS and towards dollarization, Argentina might be trying to curry favor with the United States. But once again, it doesn't solve the underlying problems. They can use physical gold for all I care as their national currency, but it's just a band-aid. Argentina has bigger economic issues that need to be addressed first. However, we have to watch the currency wars more carefully because if things escalate in the Middle East, it won't be good for the US dollar long term. But let me know what you think in the comments below. Will the Middle East de-dollarize further? And will Argentina's big gamble pay off? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.